Hey traders, TG Watkins here. I wanted to show you guys a little bit more about my trading style and some of the tools that I use. One of them that I actually learned from my job at Simpler Trading when I joined here was from John Carter. And now you can blame him for the name thing. He calls them third ATRs or just ATRs, and it's the third factor. But really, they're Keltner channels. And so what I'm going to be teaching you guys today is about how to use Keltner channels when trading. And for me, I like to use them as taking profits, whether it's to the long side or to the downside. It helps me know when to take a little bit off, or don't push it, or not the best place to get in for a fresh entry, that kind of stuff. So let me walk you through a few of these examples as we go along. And then before we get into that, I wanted you guys to know that you're going to see this today, Wednesday. Tomorrow, Thursday, is going to be the first installment of the 3-month part series that I'm going to be doing on all these special bonus classes that I'm going to be doing in the Moxie room. So if you come down here, you can see that tomorrow it's going to be based on the leverage ETF analysis. There are some special secret tricks that are actually involved with these leveraged ETFs that nobody else really talks about that I've kind of discovered, and I want to show you guys. It's what helped me take that SOXL call trade that I got 2,060% off of, and made something like $680,000 off of one trade. So that was pretty amazing. Also, Moxie patterns. So if any of you are new to the Moxie Indicator or how I teach these things, this is a good way to kind of get your feet wet and see how this works. And then over the next 2 months, we're going to be talking about how to choose the right stock, because that is very important. Even in a good market like this, it's still very important to know how to pick the good winning stocks. And then we're going to be talking about long-term Moxie setups. We're going to be talking about the monthly, weekly, daily time frames. Since, obviously this market's doing well, we're breaking out to new all-time highs, all that kind of stuff. And we're going to be running it on a limited time basis. This is going to be a special. So if you guys are interested, you got like one more day to come in before we do the first class. And it's going to be $197 per month. And this is instead of quarterly. Usually it's like $500 or $600 per quarter. You can do this at $197 per month. This is a heck of a deal. And basically the financial people at Simpler told me, like, we're not going to be offering this again for any time soon. So this is your way to get in at a pretty good price. And then you can stick around for as long as you want. And if you've been curious, now's your time to get in for a cheap price and kind of check it out and get these 3 special classes that we have going on. So if we come over here and we look at this, what are Keltner channels? And I like to call them the third ATR. Again, a little bit of a misnomer from John Carter, but that's what I call them. It's basically the average true range, and it's off of the Keltner channel. So if you're going to go into Thinkorswim or any of your other trading platforms, you're going to be looking up Keltner channels. Here is what it's going to look like. The only thing to really know is the factor is 3, and that's how I get the third ATR. You can do 1 factor, 2 factor would be the first or second ATR. You could even do the 4th ATR or anything in between. I just find that the third ATR seems to really work well for me and what I look for out there. Length is going to be based off of the 21 simple moving average. Now that's another way to look at it. And then I really only care about the upper and lower bands. So you can see here upper and lower bands. And the average is going to be the middle line. I don't need that because I already use a 21 EMA, and it's pretty much close enough. And this has been one of the best additions to my trading since I started at Simpler. So I already came, I had moxietrader.com, and I already had my own education platform and firm that I used and that I would teach. And I was really good at finding entries and dips and all that kind of stuff, but I never really knew when price was too extended and when it wasn't a good time to enter or to push it or to take some profits. It was always kind of vague. I never really had anything overhead to kind of tell me that information. And when I started really watching John Carter, when I got to Simpler, I was like, oh, he was talking about these ATRs, second ATR, third ATR. And then I put that on my charts and I started to study it and look at it. And I was like, wow, that's actually really amazing. That works perfectly with my system and helps give me this outer boundary to understand kind of the context of price. I'm really good at finding when price wanted to follow moving averages, but then we get up here and it can tell me when it's too far and that you should be a little bit more conservative about your situation. So let me show you another example, and I'll dive into a bunch more on some live charts that we can go over. So this is the SPX. So this is back, historically. We're looking at monthly. This is the monthly time frame. And you can see that these ATRs work on a monthly time frame. They work on a 2-minute time frame. They work on anything in between. You just have to understand the context of where you're trading. And you can see, of course, it's relative. So yes, price went outside of the ATR. Basically, the ATR are these dotted lines. So that's the ATR above and below. And you can see, yes, it went outside of it. And because this is a monthly time frame, it was outside of it for, four months and through here. So it's a long time. But if you look at this on the scale of what this is, because it's a monthly bar or monthly candles, you can see that it didn't like to stay out there for too long. And then it came back in. And then you can see here, it also went right up to it and then came back in. And then look here, went right to it, came back in. And again, it came right to it. It was running it and then eventually pulled back in. And then this is back in 2024, and you can see we were really running outside of it. Again, just context, because you can see for many, many months we were running up against this. So it's not always an immediate like, oh my gosh, I need to get out of my trade. It's a context thing. It's to know that it's getting a little too frothy and it's having some troubles getting too far up there, and you might want to consider that. And I remember when we were up in here and I was talking to all of my subscribers and everything, I was like, this has been a condition where the S&P on a monthly time frame has been pushing that monthly third ATR for quite some time. I don't know how or when this is going to happen, but something's going to happen and we need to get some sort of pullback in through here. Well, sure enough, it came out to be the tariff tantrums. So Trump's tariff stuff, and that's what brought it back in and totally reset the market. But amazing how the market was already telling us that it was a little too overbought and extended all the way up in there. Now, it also works on the downside. I don't have any good examples here, but you can see right there, it did go to the lower third ATR and then bounce. So how about we just get into some live charts, and I'll walk you through this and show you some things. If you look at the S&P, let's just kind of take something. This is the daily and through here. And you look at this, and you can see third ATR, pullback, third ATR, pullback, third ATR, pullback. Pretty nice, right? And you can see here on the way down, kind of this initial tap at the third ATR, and then look at this really big move to the downside. You get outside of the third ATR and boom, comes right back, doesn't it? And look at this, you get close to the third ATR, pull back, third ATR, pull back, pretty close, pull back. And then look at this on the downside. Once again, dropped right to the third ATR, didn't it? And then bounced. And it got kind of close and it bounced. And then that one didn't really matter. So it's stuff like this that you really need to pay attention to. And that's why when I talked about this, it's knowing when to take profits on the long side and the short side. Now, of course, there will be exceptions, as with anything with trading. And when you get extreme moves, yeah, you need to know about that, and it's not going to just bounce right away. But you can see for the most part, it was staying right there at the lower third ATR to the downside. Now remember, this was during the tariff tantrum situation, all that kind of stuff, and it was extreme to the downside. But you can see how it pretty much stayed at the third ATR. And then when it started to get outside of the third ATR, that's when you need to know, like, oh, that's getting pretty extreme. And at some point, that extremeness is going to turn the other direction. And so this is how you know when to take profits on the long side or the short side. So if you were, say, short the market or short this ticker, one initial place, so like if it's just going to kind of get there and bounce, one initial place is when you get to the third ATR. And then if you're looking for an actual turnaround, or when you need to say, hey, I think I've gotten enough and that probably this move's going to end, it's when price really gets outside of the third ATR, whether it's to the upside or to the downside. And you can see the same thing here. This is when the second round of tariffs came in. And you can see, yes, it was a huge move. It definitely blew past the third ATRs. But that also showed you that this was excessive. And in fact, some of the first entries that I started going long on were right here, as it was outside of the third ATR, and I could just tell, like, hey, this thing isn't going to stay out there for forever, and it's going to come back in at some point. I mean, even look at the long side. Look here. Pretty extreme right in through there, and you can see it only stayed up there for a few days and then came back in. And that's how you know when things are getting extreme and that you should take your profits. So again, if you look at this on the hourly chart, you can see way outside of the third ATR, and we actually started taking trades in through here, and it worked out nicely. Even through here, I think this was a Monday, price came down, and then we bought the very next day because they said, hey, that is getting pretty extreme to the outside. You can see how price was getting outside of the third ATR. It's not going to stay out there forever, and then you can see how it snapped back the other direction. All right, so let's kind of just take a look at some other trades and what else might be working at. Let's see, TOST, just off the top of my head, and we look at this, and here's some good examples. Let me actually clean this up a little bit. And look at this. You can see on both the monthly and the weekly. So here's the weekly right there, third ATR, pull back, third ATR, pull back. Pretty nice, right? And then look at this. Yes, you can have huge moves And you can see that, yes, price carried. And you don't want to get out too quickly. I mean, just because it hits the 30 ATR doesn't always mean you have to get out right away. This is where you use your lower time frames to help figure out and see what's going on. And if you can tell that this thing is very energetic and is going to be running this along moving averages on the lower time frames, then you stick with it. But at some point you need to understand, hey, this thing is getting way outside of that 30 ATR on a weekly basis. Fantastic, I'm having a great time, but you need to know it's not going to last forever. And the more extreme that is up there, the more likely it's going to come back down at some point. And you can see it did finally turn there. You can actually see the candle, the doji right there, and then you can see the price came back in pretty hard. So really good stuff in there. And you can even see on the monthly chart, it got outside of the 30 ATR, which again, just kind of was telling you and showing you that, hey, this is getting a little extreme to the upside. You should consider taking some profits. You definitely don't want to chase it, and be prepared for some sort of pullback. And you can even see here on a daily basis, let's kind of change this over here. And on a daily basis, you can still see the same phenomenon. You know, you can see up here, 30 ATR, pulled back, 30 ATR, pulled back, close to the 30 ATR, pull back, 30 ATR, kind of settled in a little bit, and then this is where you got that really extreme move that I was just showing you, and you can see, yes, way outside of that 30 ATR, and again, it's relative, but you can see here the price was very far outside of there, and when it was done, it came down pretty hard. And look at it to the downside. Let me move this over a little bit. Even to the downside, here's your 30 ATR. Probably a good place to take some profits if you are short. You know, if you're going to go long or short, probably a good place. And how about this? Right to the 30 ATR, right to the 30 ATR. And how about this? On the downside, right to the 30 ATR, and right to the 30 ATR there. Okay? So lots of really great stuff to use and utilize. And as I said, this is one of the best things that I've ever added to my charts. They're free, and any trading platform will have these. It's the Keltner Channels. And just by knowing where this was going to go, and that I should say, hey, maybe my first target is about there, or you know what, if it's at that place, I probably don't want to continue shorting this or initiating something to the downside. I'm probably going to want to either take some profits just in case and see what happens. Or if you're looking to buy the dip and you're looking for something to turn around, hey, maybe something like that. You know, if it came down there, hit, and then turned around, that might be a good indication that the low is in and that you can actually switch to the long side. Same thing here. Again, when moves get outside of those 30 ATRs, they don't like to stay there forever. You don't necessarily have to short the top. It just means, you know what, at some point, that's not really going to be a good trade to the long side anymore, and you might want to be careful about that. And this is true for all the time frames. And you can see here, even on the hourly, it's recently it's just kind of been going sideways, but look, 30 ATR, 30 ATR, 30 ATR, 30 ATR, third. I mean, look at that. Just kind of ping-ponging back and forth between the 30 ATR. And so that's some really amazing stuff that I like to use. And you can apply this down on the 2 minute and the 5 minute and the 15, whatever you need to do. In fact, let me show you something from today. And if we look at the SPX, there we go. And if you come over here, we actually had a pretty big move to the upside today. And look where it went. Outside the 30 ATR on the 15-minute time frame. And so I knew not to continue chasing that to the long side. I said, in fact, this is most likely going to come down at some point. And sure enough, it did. You can see it came all the way back down here. And look at the 5 minute, 30 ATR. That's fun, right? Isn't that kind of neat? You can see basically just exactly where it went. So, and you can see even here a little bit on the upside. It just likes to ping pong between this up and down through it. And so whether you're short or long, it's a great place to take profits, or maybe it's a way to actually get into a move if you're looking for a buy the dip, or if you're actually looking to short something, you know, short on the high side when it gets into these things. So I hope you guys enjoyed that. Remember, we are running this special. Come on over. It's $197 per month, and we're going to be having our first installment of this 3-part series coming up, talking about the leveraged ETFs and the Moxie patterns. So if you guys are looking to kind of get your foot wet, get, you know, step a toe in to see what the Moxie Indicator is like, what my trading room is like, and how we're doing it in here, come check this out. Again, special. It's going to be simplertrading.com/Moxie monthly. Okay, see you guys soon. Take care. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.